Every economy on Earth runs on debt. The United States owes 38 trillion, Japan owes 10 trillion. Globally, all nations combined owe over 320 trillion, more than 3 times the size of the global economy. But here's the unsettling paradox. If everyone owes money, who actually owns it? The answer is in who you think. When you follow the chain of creditors, tracing the flow of money, you find something shocking. The system isn't accidental, it's deliberate. Over centuries, visionaries in banking and government crafted mechanisms where debt could never truly be repaid, where interest always moves upward, and where those who designed it profit from every loan, every crisis, every bailout. This isn't theory. These events, institutions, and contracts are documented history. Once you see how the architecture was built, you understand why trillions in debt aren't a problem, they are exactly what the system was designed to produce. Welcome to Financial Creditor, where the hidden rules of money come to light. Before the 18th century, kings borrowed directly from nobles or merchants. Default was possible, loans were temporary. Governments could fail without collapsing the entire system. That changed in 1694. A Scottish financier, William Paterson, approached England during wartime with a radical idea: fund the government with permanent loans, guaranteed by the state, and create a bank to manage it. The Bank of England was born. Now, interest would flow forever, principal would never be repaid, and government bonds became a tradable asset, effectively creating money from debt. What was ingenious for bankers became structural for taxpayers, a permanent, self-perpetuating system of interest payments. Over the next century, the Rothschild family industrialized sovereign debt. They built a global network to distribute bonds and created a secondary market. Defaulting wasn't just refusing one creditor, it risked collapsing an entire web of international finance. They controlled information and timing to profit from market fluctuations. Governments were trapped in an inescapable cycle: borrow to pay interest, borrow more, and continue indefinitely. Sovereign debt had become both permanent and unavoidable. By the early 20th century, the United States faced its own challenges. Banking crises threatened national stability. J.P. Morgan and Associates designed a new solution: central banking. Secret meetings in 1910 led to the Federal Reserve Act of 1913. The Federal Reserve could now create money to purchase government debt, ensuring constant demand and allowing the government to borrow endlessly. The debt trap became infinite. Interest would flow from taxpayers to the banks, while the principal could grow without limit. Morgan's genius ensured that governments never had to stop borrowing, banks controlled the system. Fast forward to the 1980s, Paul Volcker faced runaway inflation. He raised interest rates to unprecedented levels, stabilizing the currency but creating new crises. Developing nations, loaded with dollar-denominated debt, faced impossible interest payments. Instead of letting defaults occur, the IMF orchestrated bailouts, restructuring debt but never forgiving it. Countries were trapped in perpetual indebtedness, forced to implement harsh economic policies, all while interest continued flowing to wealthy creditors. This mechanism became a global template. Greece, Argentina, Sri Lanka. Each repetition proves the system works exactly as intended. Today, the United States owes $38 trillion. About half is owned by public institutions, pension funds, insurance companies, mutual funds. The rest is owed to the government itself, tied to Social Security and other trust funds. Every interest payment flows from taxpayers to institutions managing the debt. Globally, similar cycles exist: Japan, Europe, China. Everyone owes everyone, and interest moves upward to the wealthiest, while the public funds the system. If governments tried to repay principal, the money supply would collapse. Dollars are created when governments borrow. Debt cannot end, it is structural. And the system is optimized to keep interest flowing eternally. No conspiracy connects all these events. The architects lived centuries apart. Paterson made debt permanent. Rothschild made it global. Morgan made it infinite. Volcker made it inescapable. Together, They created a system where governments borrow forever, pay interest eternally, and the ultimate beneficiaries are financial institutions, not taxpayers, not politicians. 38 trillion. In a crisis, it's a business model. Every debt instrument, every bond, every interest payment reinforces their wealth. The system isn't broken, it's working perfectly, just not for most of us. If you now understand how trillions in debt function, if you see that this isn't an accident but a deliberate design, you realize one thing: the system is not failing, it is operating exactly as intended. And every government, every citizen, every taxpayer is caught in its structure. The question you must ask yourself is, if the system works perfectly, who is it actually designed to serve?